In this video, I want to talk about the secret to long-term wealth. If you watch this video, it means you invest in stocks and you want to compound your wealth for the future. And there is something very important to know if you want to compound your wealth. If you have some decades ahead of you, you really want to take advantage of these opportunities. And I'm talking about stock market corrections. Stock market corrections are when indices, the S&P 500, the Nasdaq, goes down for some reason. And when people start to panic in this market, when stocks are going down, you have your favorite stocks that are going down a minus 15%, minus 20%, minus 25%. This is what happened in 2022, by the way. It's very difficult for investors to buy more in these times. I know it, I know how it feels, and now at the moment when I'm recording this video, most stocks are down, and you have this fear that maybe the stock market will continue to go down. We are at this stage, maybe you can greed a little bit and it will continue to go down before rebounding. Or maybe you will see absolutely no rebound and we are doomed for a recession. Now I want to talk about a few things. First, maybe, this is recent at the time of this recording, Ray Dalio came with a new recession fear article. You will have a lot of economists pushing for a recession, saying that a recession is near, that people expect a 50% drawdown, a 50% crash in the market. The first highlight of this video, I want you to get some value, is don't listen to economists that are doomsayers that will tell you a recession is near, that you will collapse, that the whole economy will tumble and will fall 30%, 40%, 50%. There is a quote from Charlie Munger, from Warren Buffett saying, if you want to be rich in the stock market, don't listen to economists, because if there was a correlation between stock market gains and being right about macro, most economists would be rich, which is not the case. I mean, I can even find it now. Warren Buffett, economist quote. Here we go. Don't pay attention to what any economist will say, because I can even show you here. You have all these economists with 160 IQs that spend their life studying the economy. Can you name me one super wealthy economist that's ever made money out of securities, out of stocks? No. So first, maybe you panic when you have a correction, when you have some stocks going down, and maybe you are tempted to listen to what experts are saying about the market. Most experts are very smart, very intelligent, but most experts don't have a crystal ball, so they really don't know if markets will go down or not. Even Warren Buffett doesn't try to guesstimate what the stock market will do next. He doesn't have a crystal ball. They are completely agnostic to prices. So first, if you want to compound your wealth in the stock market, the first secret is to never try to forecast the stock market. The basic formula from the best investors of our world is to just buy stocks when you think they are cheap. Maybe you are looking at meta platforms at the moment, Facebook, Instagram, WhatsApp. So this is a huge company, beautiful company. And if you think the stock is down, the stock is cheap, the stock is at a bargain price, you just buy it. And if the stock for some reason continues to go down, you have the opportunity to buy more. Or if you don't have any cash left, you just wait. You just don't overcomplexify it, overthink about it. That's a dumb way to stress about the stock market, about stocks, because they just don't move the way you want them to move. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. And now here is the second secret for you. I have this quote from Peter Lynch. More people correction. Okay, here we go. The second thing I want to tell you is that more here we go. Far more money has been lost by investors in preparing for corrections or anticipating corrections than has been lost in the corrections themselves. If you have a market that is running hot, like we had at the beginning of 2025, and if you think that we expect a recession, here is the stock market, maybe it goes up, down, down, up, down, and you say, okay, let me wait for a minus 20% drop here and I will be able to buy more stocks at this key level. Maybe you are expecting 2022 stock market crash, a bear market that we had in 2022. The key lesson here is, strangely enough, to not wait. The key lesson here, strangely enough, is to not expect this kind of bear markets, because most of the time stocks go up. Most of the time, 7 times out of 10, the stock market is ending in a positive year, positive gain, positive return for the year. So maybe you will wait here, you will wait, and the stock market will continue to go up, and you wait, and you wait, and you wait, and finally, maybe 6 months from now, 8 months from now, you have a correction here, if it happens. That's just a psychological topic for this video. If for some reason you are waiting for a correction, okay? If for some reason the correction never occurs, you are at this point here and you just wait and stocks are going up and up and up, and now you start to have a correction. It just begins. Stocks are down minus 10%. What will you do in this situation? Most people are waiting for a 20% correction, a clear bear market, and I will wait, and they will wait. And they say, oh no, I want more. I think the stocks are going down more. And they will listen to experts, to economists, to a lot of smart people saying, yeah, it will go down more. They will listen to CNBC television saying, yeah, experts think that it will go down more. And you know what? The stock market doesn't care about what experts are saying. So after a 10% drop, for some reason, most of the time, stocks recover and goes up. And you are here sitting with your pile of cash, looking dumb, and you don't take advantage of the volatility of this market. Maybe the smartest thing to do would have been to buy here when you were thinking about buying, but just you were greedy to buy, and that's it. You lost your opportunity for a 20% gain, 30% gain, because most people make money in the stock market. Most of the time, the stocks are going up. This is what matters in the very long term. Don't try to guesstimate, to forecast what will be the next move of the stock market for the next 6 months, 1 year. Even Warren Buffett can't do it, right? You just stay invested all the time. And when you have a drop, 5% drop, 10% drop, 15% drop, you buy every time. And in the very long term, it works. Because we are here to compound our wealth for the very, very long term. We don't try to invest for 2 years, right? We want to build generational wealth. I don't like this term, but this is the way it is called. We want to build huge wealth for the very long term. We want to take advantage of capitalism. We don't want to play around. It's not the casino, guys. It's just a way to grow your wealth over decades. So the secret to generate long-term wealth is to always seize these opportunities and never be greedy. And when you have a drop for some reason, maybe it will be scary. You will have strong headlines. You will have recession fears. You will have experts that will go on TV. You will have a lot of panic. You will have the darlings of the stock markets that will be going down minus 30%, 40%. All the speculative people crying on Twitter, on YouTube. You will have thumbnails with a lot of red on YouTube. That's normal. That generates more view. That's a business model after all. You will have all this information, but you have to stay consistent in the process of buying when things drop. Maybe it can be automatic. Now we are living in the world of software, AI. You can put a buy order every time the index drops by 10%. If you have a lot of panic in the market, you buy more. You can gauge what the sentiment is in the market with the fear and greed index. it's a good way to see if you have a lot of panic in the market and you buy when there is a lot of panic. But the key takeaway is this: don't wait too much. Don't think about timing the market. It's impossible. When the market is down, you buy more. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.